Fidelity is the largest retail brokerage with 55 million investors. This is Fidelity's subreddit. 3,000 investors agreeing the performance graph is useless. And for years, the same requests keep coming. Daily returns, quote, to run some analysis. How would my portfolio have done rebalanced annually? Or just a true money-weighted return? Fidelity's answer, again and again, not available. And it's not just Fidelity. Almost no brokerage answers the questions that actually matter. Did you beat passive investing? And if you did, how much extra risk did it take to do it? Entire communities maintain spreadsheets just to find out. Studies estimate the average investor trails the index by several points a year, and most never realize it, because the best move might be the simple one, the same performance or better with far less risk, and your time back. So I built the tool that answers it. Personal Portfolio Analyst starts where brokerages stop. It imports your portfolio history, classifies every cash flow, and turns it all into a daily analysis-ready return series, locally, privately, in minutes. Then it answers the question. Here's a demo portfolio that looks like a winner, 27% annualized, comfortably ahead of the S&P 500. But the verdict is already skeptical. A lower Sharpe ratio, deeper drawdowns, nearly twice the volatility. More return, bought with more risk. Was that trade worth it? So let's make passive take the same risk. In the risk-scaled passive test, pick plain SPY and click Match Portfolio Volatility. The app levers SPY up to my portfolio's volatility. 70% borrowed capital, charged 6% a year. Even after 30 points of financing drag, risk-matched SPY finishes 18% ahead. It gets more interesting. Using regression on 6 public market factors, Portfolio Analyst found that a single fund, IVW, large cap growth, carries the same factor bets that drive most of this portfolio's return. This is the kind of analysis dedicated risk teams run at institutions. Retail investors never see it. Swap the replica in, and the gap nearly closes before any leverage at all. Match volatility. Now it needs only half the borrowing, and passive wins by 28%. Same risk, better return. None of the hours spent managing individual stocks. But what if you actually do beat the index? There's a workspace for you too. This is Rebalance Your Portfolio, plotted on an efficient frontier. Volatility across the bottom, return up the side. Every dot is a portfolio you could build from your same holdings, and the curve is the best available return at each level of risk. Pick an objective. Want your portfolio with less turbulence? Minimum variance. The weights update instantly. Scroll down, and every position shows current weight, target weight, and the exact changes to get there. Have real conviction? Select Maximum Sharpe and enter your expected return for any asset with a confidence level. The frontier updates with the best risk-adjusted portfolio given your views and the measured volatility plus correlation of everything you own. Or click Work in Codex. Your positions export as a return view sheet straight into Codex. Research each name with your own notes and documents. Populate expectations with a Codex agent, and the completed sheet flows back into Portfolio Analyst, which turns it into your optimal risk-adjusted allocation. Brokerages will happily execute one trade at a time. What they won't do is look at your portfolio holistically, correlations, volatilities, weightings, and tell you how to allocate them together to produce the highest risk-adjusted return. That's institutional tooling, and now it's available for retail investors. Personal Portfolio Analyst. Was your time spent picking stocks worth it? Now you can know.